Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. And if you also trade on other pairs like Euro USD, GBP USD, then do check out the forex analysis playlist on my YouTube channel. So let's get started. As we all know that gold was extremely bullish yesterday. Even my two S's got hit and I had to call it a day. Yes, this is a discipline I follow, that if two S's are hit in a single day, then I think that it is better to call it a day or take rest for the day. Okay. In fact, after three winning trades also, if you have three good trades or three winning trades, I prefer to call it a day. I do not trade for a day because after trading for a long all these years, okay, I have come to know it very well that we human beings are very emotional, especially when we are in front of the screen. And when we are losing or either winning, we tend to make emotional decision. So yesterday my two S's got hit, so I had to quit trading for a day. So let's see what are the opportunities that we have on the chart of gold. First of all, I would like to mention one thing very clearly that see, for day trading purpose, we prefer to consult the lower time frame like 15 minutes or 5 minutes chart. But yesterday, what I observed that due to high volatility, yes, listen to me carefully, due to high volatility, the lower time frame, the levels from the lower time frame were not working properly. So if you're a new trader, if you're a beginner, if you are in a very tight spot, your capital is low right now, then please avoid trading on lower time frame because see, profit making is a different chapter. First of all, you must protect your capital. Okay, and as we all know, our capital is limited. Okay, so though I'm in a 15 minutes time frame, I would like to take you to the 4 hours time frame. Today I will not mention too many levels. Okay, I will just tell you two or three levels that are good one. Apart from that, if you get gold on other levels, that's your personal risk. But otherwise, those who are looking for safe trading opportunities, you can go with the levels that I'll be discussing right now. So this is the 15 minutes, 4 hours chart of gold in front of us. So first of all, the resistance level of 1966, 1965 that I was talking is still valid. Though yesterday market tried, to cross the level, but ultimately market saw price rejection from above. So this gives us the confirmation that yes, the resistance level is still valid. But yesterday gold made a new high of around 1969. So that is our new resistance level. So the resistance zone that we want or we have, or the strong resistance zone that we have right now is 1966 to 1970. 1966 to 1970. Yes, you can also consider 1969 also, but 1966 to 1970 is a resistance zone in the market. Means sellers are present in the market. Yesterday when gold was very much bullish, when it was going up, ultimately market failed to cross this level. So this gives us the confirmation that sellers are present in this level, and yes, definitely we can expect some selling around this level again. So if market goes up and reverses, yes, confirmation is always essential. Yesterday I also took a sell position around 1950 and my SL got hit, so that was a mistake. So when market will be hitting the 1966 1970 zone, observe the market first. If you see the prices being rejected from above, if you see selling pressure around the resistance, then only take a sell position. Otherwise, keep in mind that market looks bullish right now and there is a possibility that gold will break, तोड़ सकता है, break the resistance and go up as well. So if market reaches this level, observe first and then take the decision. If you see price rejection from above, then take a sell. If you see market extremely bullish, then yes, be ready for some bullishness, for some action. Okay. And the next level that I want to talk is yesterday. You can see that when market was facing selling pressure, the 200 moving average was providing support to the market. See, the red line is the 200 moving average, and as we all know that throughout the world, okay, 200 moving average is a very respected dynamic support resistance. So yesterday we saw 200 moving average working finely. Okay. Today we do not have any static support here. Yes, we do have in around 1915, around 1950 we do have a strong support zone, but that is quite far away. Okay, 1915 strong zone but quite far away, so I don't want to discuss right now. Just keep in mind around 1942, around 1942-43 we may have a support zone for the market. Support zone in the form of the 200 moving average. The 200 moving average you can see working as a dynamic support for the market. If I take you to the 15 minutes chart, you can see the same trend line. Okay, the same trend line working beautifully as the dynamic support for the market. So there is a possibility, yes, there is a possibility that when market will be coming down around 1942-43, yeah, around this level. I do not have exact value. This is because this is a dynamic support. In dynamic support resistance we do not have any exact value. So around you can say 1942 to 1942 to 1944 we have the 200 moving average, and in case there is a fall in the market, there is a possibility that market will get the support. If you see or if you find market bouncing from this particular support zone, you can go for a buy as well. But again I'll say confirmation is always important, because confirmation is the insurance of traders.